Countries. If mining operations face labor strikes, environmental restrictions, geopolitical conflicts, transportation disruptions, or export limitations, whenever supply uncertainty appears, commodity markets often react quickly. Investors begin watching inventory levels, mining production, and industrial demand very closely. However, it's important to understand something. No one can accurately predict future silver prices. Many online videos claim silver will definitely double or triple in price, but reality is much more complicated. Silver prices are influenced by numerous factors including industrial demand, investor sentiment, inflation, interest rates, mining production, recycling activity, currency movements, and overall global economic conditions. Sometimes strong demand pushes prices higher. Other times economic slowdowns reduce industrial activity, causing prices to fall. This is why the silver market is considered highly volatile. Let's also talk about investment demand. During periods of economic uncertainty, some investors choose to buy precious metals as part of a diversified portfolio. Gold usually receives most of the attention, but silver also attracts investors because it combines both industrial use and precious metal characteristics. This dual role makes silver unique. It isn't just an investment asset, it's also a critical industrial material. Because of this, silver often reacts differently than gold during various economic cycles. Some analysts believe the long-term outlook for silver remains positive because technology, renewable energy, electrification, and AI are expected to continue expanding over the coming decades. Others believe higher mining output, improved recycling, or weaker economic growth could reduce upward pressure on prices. Both perspectives have valid arguments. That's why experienced investors rely on research, market data, company reports, and long-term analysis instead of making decisions based only on viral headlines or emotional predictions. History has shown that commodity markets move in cycles. There are periods of rapid growth, followed by corrections, and then recovery again. Silver has experienced both dramatic rallies and significant declines over the years. Anyone considering investing should understand both the potential opportunities and the risks involved. As the world becomes increasingly dependent on advanced technology, clean energy, electric transportation, and artificial intelligence, silver's importance in the global economy may continue to grow. Whether that translates into significantly higher prices will depend on how supply and demand evolve over the coming years. So here's the big question. Could silver become one of the most important strategic metals of the future? Only time will tell, but one thing is certain. Silver is no longer just a precious metal used for jewelry or coins. It has become an essential building block of the modern technological world. What do you think? Will silver reach new record highs in the future, or do you believe prices will remain stable? Let me know your opinion in the comments below. If you enjoyed this video and want more deep research on silver, gold, global markets, investing, and financial trends, make sure to subscribe to the channel, like this video, and turn on notifications so you never miss our upcoming content. Disclaimer: this video is for educational and informational purposes only. It should not be considered financial or investment advice. Always conduct your own research and consult a qualified financial advisor before making any investment decisions. Chapter 2: The first 24 hours after gold and silver became worthless. The first hour after the announcement was complete chaos. Across the world, television networks interrupted every scheduled program. Every headline looked almost identical. The global gold market has collapsed. Millions of people refreshed their phones every few seconds, hoping the news would change. It didn't. Inside major financial institutions, emergency meetings began immediately. Government officials, central bankers, economists, and business leaders gathered behind closed doors, trying to answer one terrifying question. How do we stop the global economy from collapsing? Meanwhile, ordinary people reacted very differently. Some rushed to jewelry stores, hoping to sell their gold before prices dropped even further. Others ran to banks, demanding answers about their gold-backed investments. Within hours, crowds gathered outside financial institutions around the world. Some people shouted in anger. Others simply stood in silence, unable to believe what had happened. For many families, gold wasn't just jewelry. It was their emergency savings, their retirement plan, their children's future, their entire financial security. And now, it seemed to be gone. The shock spread beyond investors. Luxury brands that built their identity around gold suddenly faced an uncertain future. High-end watchmakers, jewelry designers, gold refiners, mining corporations, insurance companies, every business connected to precious metals saw its stock price collapse. Billions of dollars disappeared in a single trading session. Then another unexpected problem appeared. Central banks. For decades, many countries had stored thousands of tons of gold as part of their national reserves. That gold represented trust, economic stability, financial confidence. But overnight, those reserves had almost no market value. Governments faced one of the biggest financial crises in modern history. Credit rating agencies warned of possible economic instability. International investors became nervous. Global currencies started fluctuating wildly. But while one part of the world panicked, another part saw opportunity. Technology companies quickly realized something extraordinary. Gold had always been expensive. Now it was practically free. Manufacturers immediately began redesigning products using far more gold than ever before. Scientists celebrated. Engineers celebrated. Medical researchers celebrated. Space agencies celebrated. Suddenly, one of the world's most useful industrial materials was available at almost no cost. Hospitals planned cheaper medical equipment. Electronics companies planned faster and more powerful devices. Space engineers imagined building spacecraft with components that were once considered too expensive. Innovation accelerated overnight, yet the biggest question remained unanswered. If gold no longer represented wealth, what would replace it? Financial experts proposed dozens of possibilities. Some believed land would become the safest investment. Others predicted rare minerals would become the next precious assets. Many argued that digital currencies would dominate the future. Technology entrepreneurs claimed artificial intelligence would become the world's most valuable resource. Nobody agreed. Nobody knew. The world had entered completely unknown territory. History had never seen anything like this before. One simple announcement had rewritten thousands of years of economic tradition. And the greatest financial experiment in human history had only just begun. The next few days wouldn't simply decide the future of gold. They would decide the future of global wealth itself.